A financial risk or the best way to capture market share. NIO Inc. or NIO has been betting on expanding its sales, even at the expense of handing out cars without any initial cost. Investors seem to like the idea, pushing shares higher. Here is huge NIO stock prediction. Best stocks to buy now. If you're a subscriber, well, welcome back to Investing View. But if you're new to this channel and you want to enjoy more of our engaging content, make sure to click that subscribe button and use that trigger finger by smashing the like button. Now, let's get into it. Chinese premium electric vehicle maker NIO has been one of the hottest companies on Wall Street in 2020. NIO stock came into the year around $4. In late November, the stock soared above $55. That's a whopping 1,275% gain in 11 months, all because electric vehicle sales are starting to gain significant traction, especially in China, where NIO has turned into a mini Tesla of sorts. But stocks don't go up in straight lines forever. Not even red-hot EV stocks with enormous long-term upside potential. NIO stock has slid from $55 to $40, mostly because of escalating geopolitical tensions between the US and China. It also doesn't help that NIO stock is offering a bunch of new stock at $39 a share. But this is all just near-term noise. Ignore it. Buy the dip. NIO stock appears to have put in a technical floor at $40. The fundamental drivers remain exceptionally favorable, and the preset valuation leaves ample room for significant long-term upside potential. It appears that NIO stock has established a strong technical floor around $40. NIO stock briefly dropped below $40 in early December before quickly recovering back above $40. The same thing happened again 2 weeks later. NIO stock dropped below $40, but only for a moment, then quickly recovered to 40-plus prices. In other words, recent trading action on NIO stock shows that there's ample demand to buy NIO stock below $40. I don't expect that demand to waver anytime soon. It also helps that NIO stock is offering 68 million American depository shares at $39 a share. That pricing further cements $40 at a floor for NIO stock. As does the fact that NIO stock's 50-day moving average sits at $38. There's a ton of evidence to suggest that NIO stock will bottom out at $40. Couple this technical floor with strong fundamentals and an attractive valuation, and you've got a compelling reason to buy the dip in NIO stock. Despite recent weakness in NIO stock, the fundamentals underlying the Chinese premium EV maker remain exceptionally favorable. China's auto market is rebounding with vigor. Car sales in China have now risen for 5 straight months, illustrating a robust recovery from the COVID-19 shock earlier in the year. Tons of fiscal stimulus and pent-up consumer demand should help accelerate this recovery in 2021. The China Association of Automobile Manufacturers expects auto sales in the country to rise another 4% in 2021. Electric vehicles are at the forefront of this recovery thanks to robust government support, shifting consumer demand, and rapidly increasing supply. All of these drivers will remain in place for the foreseeable future. Chinese EV subsidies are going up in 2021. Consumer demand continues to shift in favor of EVs. More and more car companies in China are launching more and more EVs. China EV sales are expected to surge 40% in 2021. More than that, China is targeting 20% EV penetration by 2025 and 50% by 2035, meaning that this market has several years of 40% plus growth ahead of it. In this booming Chinese EV market, NIO is a shining star. The company makes premium e-SUVs that are second to none in terms of brand, aesthetic, design, and performance. They are, for all intents and purposes, the best EVs in China, save maybe Tesla cars. That's why, amid China's rebounding auto market and sizzling EV market, NIO's delivery volumes have increased by more than 100% for 8 straight months. This trend should persist for the foreseeable future, too. Plus, NIO is very likely to expand internationally within the next few years, a move which could inject ample enthusiasm into the stock and significantly extend the company's growth runway. Overall, the fundamentals underlying NIO stock today remain very positive. Thanks to the recent sell-off, NIO stock is now attractively undervalued relative to the company's long-term growth potential. NIO should easily be able to leverage its second-to-none branding, design, and technology to become one of the largest players in China's booming EV market. NIO should also be able to replicate its enormous China success in Europe and North America. Assuming so, NIO easily projects as a 5% plus market share player in the global EV market by 2030. That market should easily measure 25 plus million vehicles by then. A 5% plus share on that implies over 1 million NIO car deliveries in 2030. Indeed, you should see annual deliveries climbing to over 1.5 million by 2030. Per my modeling, that sets the stage for over $60 billion in revenues, strong profit margins north of 10%, and earnings per share of at least $5.50, even after factoring in recent dilution. Based on a 20 times forward earnings multiple and an 8% annual discount rate, that implies a 2020 price target for NIO stock of $55. NIO stock is a long-term winner at the epicenter of the EV revolution. Recent geopolitical noise and share offerings are just near-term noise, creating ephemeral weakness in the stock. What do we do when long-term winners plunge on near-term headwinds? We buy the dip, once technical support shows up. NIO stock is no different. Now that technical support has shown up around $40, it's time to get greedy while the market is being fearful. NIO is one of the largest EV startups in China. As such, it has strong ties with the Chinese government, which it can use to its advantage in the coming year. Chinese politicians want the country to become a leader in the EV industry, and they have been very accommodating with NIO. Additionally, NIO enjoys the added advantage of the lower labor cost in China. However, there has been trade tension between the US and China for the past 2 years. US President Donald Trump signed a bill ordering the delisting of foreign companies that do not follow the same accounting transparency standards that the securities regulation imposes on the US public firms. If the company does not comply with audit inspections for 3 years in a row, delisting could happen. Chinese companies are reluctant to let regulators inspect their accounts. This bill can affect NIO stock moving forward, but because of the 3-year compliance period, the impact will not be immediate. Furthermore, NIO's future success relies heavily on the whims of the Chinese government. When you add all of these factors together, NIO stock is simply too expensive to justify the risk. Shares could rise further, but buying at this level is not a good idea. The Shanghai-based electric vehicle maker has announced that customers may grab one of 3 different models without making a down payment. The limited time proposition runs through February 28th, which is ample time to make a substantial number of sales. The recent move is not the first by NIO. It is repeating a similar feat it initially performed back in September of 2019. Back then, the trigger was an attempt to raise sales, while the 2021 zero down payment approach could be an attempt to compete with Tesla in China. Investors were happy to see large growth percentages in the company's earnings report, even at the cost of slower cash flow. At this juncture, markets seem to support NIO's move to expand its reach. It is essential to remember that every car sale implies servicing costs, including those for batteries. According to 8 Wall Street analysts that have issued a 1-year NIO price target, the average NIO price target is $53.83, with the highest NIO stock price forecast at $80.30 and the lowest NIO stock price forecast at $14. On average, Wall Street analysts predict NIO's share price could fall to $53.83 by January 22, 2022. The average NIO stock price prediction forecasts a potential downside of 13.12% from the current NIO share price of $61.95. The consensus among 9 Wall Street analysts covering NIO stock is to buy NIO stock. Out of 9 analysts, 3 are recommending NIO as a strong buy, 0% are recommending NIO as a buy, 6 are recommending NIO as a hold, and 0 are recommending NIO as a sell, and 0 are recommending NIO as a strong sell. What do you think about this prediction on NIO? Let us know in the comment section below. And hey, if you enjoyed this video, don't forget to like and subscribe to our channel so we can continue giving you the best content. Thanks for watching, and we'll see you in the next video.